Is the dollar bullish or bearish right now? And what are my current positions? That's what we're here to find out. Thank you for joining me. Let's jump right in. Okay, to make things really confusing, right now I have two trades open. On one hand, I'm long the US indices, the S&P 500. And on the other hand, I am long the dollar through USD/JPY. This is really confusing because these trades you're not usually going to find in the same portfolio at the same time unless someone's trying to hedge. And we need to talk about it. I'm going to go through my thoughts on why I'm actually bullish on both, which you don't usually find because, again, usually when the USD is going up, a lot of times you're going to see, the S&P 500 go down and vice versa. When the dollar's going down, sometimes you might see the stock market rising. So it's a bit weird, but I am long on both. And, again, here's my first trade. I'll show you dollar yen. I'm long, right? So I have this USD/JPY trade open. And at the very same time, I am currently in a position on my Webull account on the long side here. So I've got an S&P 500 trade long as well. So yes, very confusing. And let's dive into it. Now, here's the thing. I'm actually getting some signals on both sides of the indices and on the dollar. And I think part of the reason comes to this concept here that you see on the screen. This is our risk on, risk off gauge. And you can see that right now we are very neutral across the board. Risk on, risk off is kind of flimsical in the sense that, sometimes the markets are, there's an appetite for risk. People are buying assets like the stock market, the Australian dollar, the Canadian dollar, the pound. And there are other times where the market's more fearful and buying things like the Japanese yen or buying up the dollar. And right now, I think it's pretty reflective of current sentiment, which is a kangaroo market going back and forth on these different assets. So again, when we talk about my watch list here on the Edge Finder, what you'll see here is that if we filter for things that have strong sell or buy bias, so confusingly, we have the NASDAQ on a buy, which is a clearly risk-on asset, but we also have things like shorting the pound against the dollar, shorting the Australian dollar, and shorting the euro. These would be considered sort of more risk-off plays, if you will. So we're getting mixed sentiment, and that's why, again, I have a long position open on the dollar yen. I liked this trade. It came up on the Edge Finder. You can see here as USD/JPY. And why I'm also long on the US indices with that NASDAQ poking up, and S&P 500 was here, but it's since fallen off. Let's go through some stuff and I'll show you guys kind of what I'm thinking. So recently, inflation data has been on the decline. Here is a quick look at the fundamentals for a second. If we go just to the US dollar, related to the dollar, of course, inflation has been on the decline. Right. And so that's been sort of after that peak, we've seen a bit of a run up on, the U.S. stock markets. We've seen some optimism on things like, again, SPX 500. This thing has been on a bit of a tear recently. And from a technical perspective, this thing looks pretty healthy. You've got higher lows, you've got breakouts, and I'm looking for an opportunity to continue to look to buy and add to my long position on the S&P 500. And most of that is due to the declining inflation number and sort of more recently some dovishness from the Federal Reserve and Jerome Powell's comments. So I've been riding that momentum. But off the back of that, I've also been a little bit unsure about the market and risk off. And as we do rise higher and there's fears of recession, it comes into question, hey, has the dollar sort of started to break back the other direction? Here's a daily chart view of the US dollar, and you can see where we're kind of at with it. We had this breakout to the upside and this run to the bullish side, right? We saw a big explosive move and a pullback, and I decided, hey, you know what? I'm going to hedge a little bit here, and I'm actually going to get long the dollar. Hence, I bought USD/JPY. It showed up on the Edge Finder. And why is the bullish side of this coin coming into play? Here is the answer. When we go to this smart money tracker and we record we look at what the recorded commitment of traders data is showing us, there's something very eerie on this chart, and that is that the US dollar is still heavily longed by institutional money. Not only that, take a look at gold. Gold coming in as this sort of safe haven buy. We see the dollar and the gold market heavily bought up by institutional traders. And this got me thinking. I'm like, hey, I'm long the S&P 500, but the dollar doesn't look too bad, and Gold is still sort of in play. This is why we're left with kind of a confusing kangaroo style market, and much of the market is in the same camp right now. Do we sort of sink our teeth in risk on and go completely with the Nasdaq and the S&P 500, or do we sort of hedge our bets a little bit and pick up some dollar trades? And I've chosen to do the latter, where I'm sort of buying into some of these US dollar moves, these things that are trending well. You guys know my style if you watch my videos. I'm looking for things that are trending, and we've since seen a breakout on my USD JPY trade right here. So I picked this one up. I shared this signal inside of the Discord channel. Let me see if I can show you guys that. So here is, we've been talking about the dollar a lot in the S&P 500 in the group. Right here, you can see my current positions listed. So I am long on the USD JPY and also long on the S&P 500, making things, like I said, a bit of a hedged scenario. Now, I want to talk specifically about something that Frank and I discussed on our live stream here today. We talked about this. Here is the S&P 500, a pinnacle, if you will, of risk on, risk off sentiment. We can see that the S&P 500 is putting in a very simple wedge formation. And what this is telling us is that buyers are strong enough to bid this thing up and continue to push higher, whereas sellers are also strong enough to hold it and keep it in check. So like I said, I'm long dollar, I'm long S&P, and I'm at this point now waiting to see what sort of the verdict is. If we're able to hold and break to the upside, I will look to continue to hold my long trade, and those dollar trades will probably come off. My dollar yen trade would probably, in that case, stop out for a loss. And if this thing starts breaking to the downside, my hedge trade, my dollar trade that I picked up here recently, might actually be the more profitable of the two. And I want to add one more thing here. If we go look at my USD JPY trade, like I said, I'm long currently. You can see my entry was over here. Price made its way into profit, now has pulled back. I want to show you something else. If we pull up an indicator here called the correlation coefficient, we can actually compare how closely these things are correlated or inversely correlated, more likely in this case. So I'm going to apply that. And I know I just threw a lot of words at you. What we're looking at here at the bottom of the screen is showing the relationship between the S&P 500. I'll move my camera so you guys can see it right below me. The S&P 500 right here and the USD JPY. When this number when this indicator points towards a higher level of correlation, what that means is that when the dollar yen goes up, the S&P 500 also goes up. When we get a more extreme opposite indicator, as we're seeing currently, it's the opposite. The dollar goes up, the S&P 500 goes down. The dollar goes down, the S&P 500 goes up. So again, I do acknowledge that kind of my two positions contradict one another, and in some ways I am sort of hedging my position there on both. So I'm now I'm positioning myself to watch for what the market decides to do next. Are we going to see an explosive risk off move where the dollar gets strong again? In which case I'll look to hold on to this dollar yen trade and probably bail on my S&P trade. Or flip version, are we going to see the S&P 500 explode higher and the dollar yen probably take me out for a loss? Or is it the rare scenario where we get something like this little segment where there's not actually a strong correlation? When correlations, you see it break down temporarily. I'll give you guys another example. Here is let's see if we can find, like this time. When there's little to no correlation, what that means is that both could be moving the same way, both could be moving differently. There's not a sort of a strong effect on one another. So as we look at it right now, I'm getting bullish signals on both, which is incredibly confusing. And like I said, this is where we sort of watch to see what the hedge does, which trade is going to come off, which trade is going to stay on, so on and so forth. So an interesting time in markets, to say the least. We're seeing, like I said, I think it's very indicative just from looking at this risk on, risk off gauge. This can be a very important page for exactly what we're talking about. We don't have clear, decisive moves. And we built this page specifically so that people can get an idea of what risk on or risk off environment we are currently in. this is a nice thing to refer to when wondering, hey, are the markets moving decisively right now? If we don't get sort of like a synergy between these three, the market may just be in sort of a back and forth and range bound or not decisive environment. We're probably waiting on some more news and sort of catalyst to come back in to give us an answer on this. But for now, this is my current positions. Again, sort of hedging my bets in both directions and waiting to see what sort of what happens next. I hope that this made sense. I know probably a bit of a more confusing and advanced video, but I have trailing stops employed in both my dollar and my indices trades. So we'll see what ends up happening, and we'll try and follow what the market decides to do, playing more on the reactive side than the predictive side. If you guys want trials of the Edge Finder, this software that we have here on the screen, there'll be a link down below in the description. And if you want to join our Discord channel, there's also information on how you can do so down below in the description. We have a free Discord available, a free trial of the Edge Finder available, and all that stuff can be found down below. Or if you'd like to just go ahead and join us within the Discord, we'd love to have you. Click that link, use that promo code down below, and hope to see some of you guys inside. Thanks for watching. We'll see you next time. It looks like you made it to the end of one of my videos. Thank you so much for supporting my content. It really means the world to me. And down below in the description, I put together some of my best resources for aspiring traders who are looking to improve. I've got some free downloads that could help you, some broker recommendations, and if you'd like to join our Discord or get access to some of our trading software, all of that will be linked down below in the description. Thanks for watching, and we'll see you next time.